Hello and welcome to Business Incorporated. Thank you for joining us. I'm Chimeze Obi Iwago. On the show today, African Export-Import Bank to give Angola $2 billion in financing support. And South African Parliament approves national minimum wage bill. Plus, Kenya court charges officials in graft investigation. We'll get the show started now with the markets, and here in Africa, the Nigerian stock market rebounded after weeks of bearish run. The index was up 0.35% at intraday. Looking at other numbers there, South African JSE and the Egyptian markets were in the red, down 1% and 1.02%. Kenya also closed low. That was on Tuesday. In the Middle East, most of the markets were down at intraday except Saudi Arabia. Qatar index was the top loser, down 2.31%. Abu Dhabi was down 0.40%, Dubai down 0.54%, and Saudi Arabia was slightly up 0.08%. And in Europe, markets were mixed in early trade amid a deepening political crisis in the Eurozone's third largest economy. For details of these and more, we hope to get Conrad Bussen as soon as possible to talk to us. But let's move on now to the U.S., where the stock index futures pointed to a higher open, rebounding slightly after political turmoil in Italy sent markets tumbling in the previous session. At around 4 a.m. Eastern Time, Dow futures rose 50 points, indicating a higher open for the index. Nasdaq and S&P 500 futures also pointed to a narrowly positive start to the session for both of their respective markets. On the data front, ADP payrolls data are due out at 8:15 a.m. Eastern Time, while a second reading of first quarter GDP will come out at 8:30 a.m. Eastern Time. Meanwhile, the Federal Reserve will release its beige book at 2 p.m. Eastern Time. On the earnings front, Michael Kors and Dick's Sporting Goods will post new earnings figures before the bell, with PVH and Box reporting after the bell. And now to Europe, where markets were mixed in early trade amid a deepening political crisis in the Eurozone's third largest economy, and that's Italy. Let's cross over now to Frankfurt. I guess Conrad, my colleague there, is ready to talk to us. Hello, Conrad. Good afternoon.
Hi, Timmy. Good afternoon. Hey, everyone in Nigeria.
Right, let's start off with some kind of company news there. German insurer Allianz is getting more engaged here in Africa with the acquisition of 8% of the shares in Nigeria's African reinsurance. How important an investment is this?
Well, you know, it's, in terms of money, not a very big investment for a huge company like Allianz, or Allianz as we call it here in Germany, but it is a very important investment. You know, we should also keep in mind that Allianz is not only investing in Africa Re here. Last year, it already acquired the majority of the stakes in the insurance company Ensure in Nigeria, and the two investments combined really make it a pretty clear statement by Allianz that it wants to take part in the Nigerian growth story and in the, of course, hopes and growth expectations for the whole African continent. The step now is also a challenge for Swiss Re, the large Swiss reinsurance company, which recently announced that it would also try to invest more in Africa and benefit from growth in Africa more. Of course, the earnings of this business are likely not to be very high at the beginning, at least if you compare it with Europe or with business in America, but the margins are likely to be very attractive. As you know, in Nigeria, a lot of the business is already digitalized. You do not have a lot of overhead, a large labor force within a company like Africa Re. You make relatively high margins with relatively few costs and a labor force. That's very different to here in Europe, where also Allianz, the market leader and a very efficient company, still have relatively high costs. Every euro that they return or that they profit, that they make, they need to spend a relatively high amount of money to make this euro. And that is expected to be different in this business in Africa.
All right, let's get back to the Eurozone where you are. The Italy jitters have subsided somewhat on the markets in Europe. Today, Italy auctioned off new government bonds for up to 6 billion euros. How did this auction go down?
They went okay, I have to say. Italy came to the market with new government bonds that run 5 years and 10 years. And looking at the 10-year auction, it's quite representative, I would say, because it shows that Italy really has to pay higher interest on its debt. The yield on the new 10-year Italian government bonds is 3%, and that's 1.3 percentage point higher than at the last auction of 10-year Italian government bonds. Still, demand was okay. The oversubscription rate was 1.58, which means that there was more demand for those bonds than bonds on offer, and that is point of reassurance for Italy. It is positive for Italy. It means that, of course, things are getting tighter, credit conditions are getting tighter, but investors are not all saying, well, it's not worth investing in Italy at all. We should refrain from them. Of course, we have to keep in mind that most of the investors buying those Italian government bonds were Italian banks. It's a moment of patriotism for them to show up at these auctions and buy those bonds.